and very good evening. Today we will present our report about companies' compliance and disclosure to Malaysian Financial Reporting Standard MFRS. We have choose MFRS 116 Property, Plant and Equipment Standard. Before that, we will like to introduce ourselves. My name is Nur Hazira binti Husaini. My matrix number is 201X71.
My name is Nur Balkis binti Muhammad Rizwan. My matric number is 203542.
My name is Nur Izzah Najwa binti Osman. My matrix number 203541.
My name is Nur Nadira Izzati binti Helmi Zazwan and my matrix number is 203377.
My name is Nurul Huda binti Muhammad Arsad. My matrix number is 204056.
Okay, then I will continue with explaining about our report's purpose. This report is about to assess students' ability to apply knowledge of selected standard MFRS and assess their analytical and critical thinking ability in evaluating companies' compliance. This report is explaining the standard that apply in the selected companies that listed in Bursa Malaysia and how they comply with the standard. We need to review and evaluate the company's annual report on compliance and disclosure. The companies chosen were from consumer product sector. Students need to choose two different companies to make a comparison of annual report from both companies. And our group have choose Huatai Industry Berhad and Apollo Food Holding Berhad. I will introduce a little bit about the companies and the MFRS chosen. First company that we choose is Huatai Industry Berhad, which is the oldest manufacturing that produce biscuit in Malaysia. Since this company listed in Stock Exchange Malaysia, it expanding their company into largest manufacturing in biscuit industry in the country. Huatai Energy is a brand name of product that produced by this company. Its product include many types of biscuit, either it's just a plain one or with the cream, such as cracker and cream sandwich, and cakes such as Swiss roll and layer cake. They aim to be the number one of manufacturer that produce variety biscuit and snack with the best quality. The second company that we choose which is Apollo Food Holdings Berhad, the company that produce snack and layer cake of chocolate. They has two important products that become a popular choice, especially to the kids, which is wafer and cake that mostly from chocolate flavor. The company's first manufacturer is at Johor Bahru, Malaysia. Apollo is commonly known as chocolate layer cake, the most popular one until nowadays. This company actually is a subordinate company of Keynote Capital Sdn Bhd. All Apollo products price is affordable, even kids also can buy it. Apollo Food Holding Berhad has two subsidiaries under them, which is Apollo Food Industries Sdn Bhd and Huat Food Industries Sdn Bhd. As for the top manufacturer, they will definitely have companies have competitors such as Dutch Ready Made Industry Berhad, Nestle Malaysia Berhad, and others. Next, the standard that chosen from this report is MFRS 116, Property, Plant and Equipment. Standards are used in some companies to guide or as a reference for them to run their company. MFRS 116 Property, Plant and Equipment is an intangible asset that used for produce or supplies good or service, and the asset is used for long-term period. In order to recognize the property, plant and equipment as an asset, both of following conditions must be followed. First, must probable to have benefit for the future economic from the asset that will flow through entity, and the cost must measure reliably. Both conditions are applied for initial recognition and subsequent recognition. Some assets do clarify recognition as an asset, although do not bring future economic benefit directly. To derecognize the PPE, the asset must be disposed and no expected benefit of the asset on the entity in the future. For these two conditions, the company will have gain or loss on the asset. All asset has depreciation and it is recorded by two methods, which is straight line method and reducing balance method. There is two models that have to choose to measure this PPE. It is cost model and revaluation model. Cost model is carried at cost minus any accumulated depreciation and any accumulated impairment loss, while revaluation model is carried at revalued amount being its fair value at the date of revaluation minus any subsequent accumulated depreciation and subsequent accumulated impairment loss. The difference of the revaluation model is if the PPE evaluate entire class of PPE must revaluate too. Then we will continue with the review on compliance and disclosure.
Okay, so I will present about the review of the compliance and disclosure by the companies on the selected standards. I will present about the review on Apollo Food Holdings Berhad. So Apollo Food Holdings Berhad has disclosed their financial statement and annual reports according to MFRS 116 Property, Plant and Equipment. All assets are depreciated on a straight line basis over the estimated useful lives, except for construction in progress because it represents equipment under installation. It is depreciated when the asset is ready to be used. Below are the tables that shows the depreciation rate for the property, plant and equipment of the Apollo Food Holdings Berhad. First, plant, machinery, tools and equipment has the depreciation rate for 4% to 20%. Second, motor vehicles, 20%. Office equipment, furniture and fittings, 10% to 33.33%. Renovation, 10% to 20%. Next, the table shows the depreciation years for the property, plant and equipment for the Apollo Food Holdings Berhad. First, long-term leasehold land, 92 to 98 years. Second, buildings and improvement, 13 to 22 years. Apollo Food Holdings Berhad does not apply the revaluation model to all of their assets. So the carrying amount in the beginning of the accounting period is same with the carrying amount at the ending of previous accounting period. Next, I will tell about the depreciation charge, impairment loss and carrying amount of all the assets in the Apollo Food Holdings Berhad. First, long-term leasehold land, the depreciation charge of the financial years is RM 256,432. There is no impairment loss for the long-term leasehold land, and the carrying amount for the year is 24,038,799. For the buildings and improvement, the depreciation charge is 1,158,251. There is impairment loss for the buildings and improvement, which is 1,922,111. The carrying amount for the buildings and improvement is 12,814,902. Third, plant, machinery, tools and equipment. The depreciation charge for the financial year is 6,354,039. There is no impairment loss, and the carrying amount at the end of the financial period is 53,346,645. Next, the motor vehicles. The depreciation charge for the financial year is 112,950. There is no impairment loss for the motor vehicles. The carrying amount for the motor vehicles at the end of the accounting period is 501,243. Last, the office equipment, furniture and fittings depreciation charge is 286,655. There is no impairment loss, and the carrying amount at the end of the financial year is 1,428,503. Apollo Food Holdings Berhad had disposed their asset, which is motor vehicles, amounting for RM 89,833. Next, the review of Wata Industries Berhad.
Okay, for Huata Industries Berhad, all property, plant and equipment were accounted in separate name of accounts. And also purchase software is a part functional of the functional of the related equipment was capitalized as part of that equipment. Huata Industries depreciated using straight line basis by allocating their depreciation amounts over its useful life except for freehold land because it has no depreciation. It has unlimited useful life. The depreciation rate for Huata Industries as below: leasehold land and building 1% to 4%, renovation 10%, plant and machinery 5% to 33%, office equipment, furniture and fitting and motor vehicles 10% to 20%. So total depreciation for the financial year has two types, which is group by grouping, 2,290,200 and 300, and by company is 2,005,295.
Okay, table below shows the depreciation at the financial year, impairment loss, and carrying amount of the asset as at 31 December 2018. There are 5 property, plant and equipment. First, property, the depreciation at the financial year is 543,036. The impairment loss is 79,527, and the carrying amount at the end of financial period is 6,138,472. For the plant and machinery, the depreciation at the financial year is RM 1,548,316. There is no impairment loss, and the carrying amount is 6,018,203. For the office equipment, there is depreciation at the financial year is 85,349, and there is no impairment loss. The carrying amount is 295,760. The furniture and fitting depreciation at the financial year is RM 18,293. There is no impairment loss too. Amount is 116,598. The motor vehicle depreciation at the financial year is 97,306. There is no impairment loss too, and the carrying amount is RM 650,271. Below, as referred to statement of financial position, Huata Industries Berhad has disposed their property, plant and equipment as below. There is 3 items for disposal. First, plant and machinery. The disposal is RM 210,966. Next, the office equipment. The disposal is RM 4,220. And the last one is motor vehicle. The disposal is RM 170,584.
Next, I'm going to present about the evaluation and comment on both companies with the disclosure requirements. As for Apollo Holdings Berhad, it complied the standard as this entity has disclosed their financial statements and annual report according to MFRS 116, which is property, plant and equipment. For cost measurement, property, plant and equipment are measured at cost. Carrying amount will deduct the accumulated depreciation and any accumulated impairment loss. For the disclosure, the entity will report in the financial statement during the beginning and end of the period, which is the gross carrying amount and the accumulated depreciation. Second one, for depreciation, straight line method with respect to its residual value over estimated useful life. As example, the depreciation amount for motor vehicles is 112,950 and it will refer to statement of profit or loss. Acceptable for construction in progress. And for the third one, disposal of PPE. For motor vehicles, RM 89,833. Property, plant and equipment is recognized when there is no future economic benefits are expected from its use or from its disposal. Second one, for Huatai Industries Berhad, it complied the standard as this entity has disclosed their financial statements and annual report according to MFRS 116. Firstly, for cost measurement, property, plant and equipment are measured at cost. Secondly, carrying amount will deduct the accumulated depreciation and any accumulated impairment loss. The entity will report in the financial statement during the beginning and ending of the period, which is the gross carrying amount and the accumulated depreciation. Secondly, depreciation. Straight line method with respect to its residual value over estimated useful lives. As example, the depreciation amount for motor vehicles is RM 97,306. We refer to statement of profit or loss. Acceptable for freehold land has an unlimited useful life and therefore is no depreciation. Thirdly, for disposal of PPE, motor vehicles for RM 100,000, 70,584. Property, plant and equipment is to recognize when there is no future economic benefits are expected from its use or from its disposal. As for conclusion, this assignment has improved our understanding about the selected standard that we choose, which is MFRS 116 property, plant and equipment. Secondly, we had faced some difficulties on finding the reference to paragraph from relevant MFRS as we need to assess our analytical and critical thinking. And lastly, this assignment is a great source of knowledge for us that we could apply what we had learned in class in terms of review and evaluate an entity's annual report based on a period and particularly with their disclosure. With that, we thank you.
Thank you.
Thank you.
Thank you.
Thank you.